The class will start at 8 5 p.m. So hope you guys get ready by 8 5. Thank you. Hello everyone. So I think the start can start now because we are almost most of us are in. Abdul, how are you? Could you start?
Hey,
Hi,
hi
hi.
everyone.
We are good. What time is it in your area?
Oh, it was 6:30 p.m.
Oh, that's cool. That's a dinner hour, but yeah, have
Okay,
a, yeah, have a great teaching time tonight. I hope you guys gonna have fun.
sure.
Yeah, yeah.
I just wanted to confirm that am I audible properly? Voice is coming loud and clear to you.
Could you repeat the question?
My voice is clear to you. Am I
Yeah,
sounding
yeah,
okay?
yeah.
All right.
Perfect. Yeah.
Okay, perfect. Thank you.
Okay.
So I just want I'll share my screen and we have a presentation ready around. So today's topic is benchmarks and metrics. So just let me out the screen and we can start. All right, so I think the screen is visible to you. Perfect. Good evening, everyone. I am Zishan from Pivot. I'm a business developer working on partnerships and growth. And to give you a quick introduction about Pivot, Pivot is a global venture accelerator firm, and we are a milestone. We have a milestone-based approach towards acceleration, and we do a one-on-one uh, assistance to all the projects we accelerate. So this is what we do. And today I'll be discussing metrics and benchmarks that are crucial for high growth technology startups, particularly in the Web3 space. So, we will cover key metrics that matter for various types of blockchain businesses and provide benchmarks in the roles, and we'll also dive into the various concepts which will be using to identify your different stages to measure and gauge where actually you stand, And since I come from a partnerships background, I'll try to give you a gist of how working on a particular strategic partnerships or developing your ecosystem with partnerships, the right kind of growth can be achieved, and these metrics and benchmarks could be satisfied along with that. So let me just. Uh, I think there is some issue. All right. So when we talk about today's agenda, I have already discussed the idea. So right now, the Web3 ecosystem is very unique. We all know it is blending elements of traditional tech startups with novel concepts like decentralization, tokenomics, DAO, governance. So today we'll explore how these elements shape the metrics we use to evaluate and grow our projects. Also, we will try to equip ourselves with the knowledge to effectively measure your project's progress, because it is very important as and when you grow to identify uh, the actual framework which the VC would be looking at, which your investors would be interested in knowing about you. So these are some of the areas which we'll be totally focusing on. And the first thing which we'll talk about is a kind of framework which we will be utilizing. So this is the VC ladder of proof for Web3. Now, achieving the product market fit is a critical milestone for any blockchain startup. This ladder of proof gives you a framework around which you can gauge your startup and identify where you actually belong. To for achieving product market fit is the ultimate goal for all the startups, and it is a very critical milestone for any Web3 startup we see. So this particular ladder of proof provides a framework for founders to present quality proof points to the VCs at different stages of their growth journey. In the earlier days, when we talk about traditional startups, the key idea behind it, putting yourself in this leader, was to validate your customer needs, acquire and retain active users, and demonstrate willingness to pay to prove that you have achieved what we call a product market fit. But as and when we are evolving and going particular towards the Web3 landscape, the traditional VC ladder of proof takes a new form. So I'll try to break down the traditional ladder of proof to the key stages. I have identified five. So the first is validating the need for decentralization. Say, suppose I'm taking an example that you are building a decentralized web platform, a DeFi protocol or something. So this the first point comes to validating the need for that particular technology. This is your project's why. Can you demonstrate that blockchain or decentralization genuinely adds value to the use case, whatever you are building? For example, Ethereum validated its need by enabling smart contracts that allowed developers to create decentralized applications, right? So, second is demonstrating a working prototype, or as we call it, the MVP. If you have a minimum viable product or something in the market, it is very easy for the VCs, for your community to actually gauge the potential of what you are building. Then tracking the early adopters and the community members in Web3. If you have a community, you are being backed, you have a solid backing them. If you have a very active community behind, we all know that community is king in Web3. So early traction often looks like an engaged Discord server, could be a active governance forum, or a growing list of testnet users, or basic interactions on Twitter. The last third is fourth is the proving the token utility and economic model viability. So this involves demonstrating that your token has a clear use case, and that your tokenomics is sustainable. So tools like token simulators can be valuable here. You can understand that whether this token would make sense for the community, whether it has a valid use case or not. Then the last is showcasing ecosystem growth and network effects. So as the project matures, VCs will actually look for signs of a flourishing ecosystem. So this will be achieved with right kind of partnerships and whatnot. So remember that progress through these stages isn't always linear. You might find yourself revisiting and refining earlier stages as you go. Now let's identify the metrics which we will be discussing today particularly. So when we talk about, so these are the metrics which we call that these metrics would actually identify a high growth technology startup. So to break this down, we will introduce the key metrics essential for evaluating, how this growth is looking like on a chart. So you will be actually able to plot your growth and identify where you are lacking, where you need to go. First is engagement retention. Now we are talking about the traditional metrics which we use. It is engagement and retention, which measures your user interaction, continued use of your platform. Growth indicates the ability to scale your network. Magic numbers, scale efficiency. I will deep dive into each of these topics in the subsequent slides. Just to give you a brief, margins, customer acquisition cost, loan multiple, working capital ratio, fundraising metrics. It's all something which we will be discussing in the subsequent slides. Apart from that, whenever we are talking particularly about a Web3 project, a Web3 startup, projects span a wide range of sectors here, which each has their own key metrics. So some of the ones I have identified here are in the right side of the table. So these could be the token metrics. These apply to most projects and include metrics like token velocity, distribution, liquidity, network activity and growth, the smart contracts usage, DeFi specific markets, NFT marketplace, governance participation, and your developers' activities. When you talk about, now we will talk more deeply about the engagement and retention. So when you talk about your engagement and retention here, user engagement and retention are key indicators of whether users find value in your blockchain product or service. Engagement measures how much time users spend on your platform, while retention looks at how long users continue to use your product over time. So engagement and retention in our space takes on unique forms. So it could be the traditional way of, say, the daily active users, the monthly active users. Here becomes the daily active wallets, monthly active wallets, token holder retention, staking participation, governance proposal participation. So these are some of the things which we will analyze that we need to take care of. So if we think of some examples, Uniswap sees around 50,000 to 1 lakh daily active wallets depending on the market conditions. For governance, Compound has seen proposal participation rates ranging from 5 to 30%. And so these are some of the ways in which we identify engagement and growth happening with your startup. Now, when we specifically talk about growth, so growth is a critical measure of startups' ability to scale and capture market share in the blockchain space. So these are some of the things like total value locked identifies the growth. So TVL particularly important for, say, DeFi projects. Aave, for instance, grew from 500 million TVL to 20 billion TVL in just some 2 years of time. Then comes, you identify growth with the network traction, transaction volume growth. You also identify the token holder growth. This can indicate widening distribution and adoption. For example, the number of Bitcoin addresses holding at least zero point 0.1 BTC has grown steadily, reaching over 3 million in 21. And ecosystem expansion for layer 1 platforms, track the number of dApps built on your chain. Polygon, for instance, had over 7,000 dApps as of 23 last year. So also, when you do, when you look at it from the perspective of partnerships or business development, you see that strategic partnerships can significantly influence your growth. Collaborating with other projects, technology providers, traditional financial institutions can help scale your operations and reach new user base. So now we'll talk about magic number. It is very important to understand how this works. So I'll just give you a quick example. I'll let me explain this to you. The magic number measures sales efficiency by calculating how well your sales and marketing expenses translate into revenue growth. A high magic number suggests your company has both product market fit and channel product fit. So these are the areas where if you are able to achieve, you are making a very strong case in front of your VCs. So the formula is given here that it is the new TVL added by the marketing spend you do. So so collaborating with sales, marketing partners has proven to improve your magic number. So this works well for a DeFi project. Say if you have a $10 million TVL, after spending only $1 million on marketing, you achieve a magic number of 10. So a magic number of say less than zero point 0.5 is considered not ideal. So you have to understand these things as well. All right. So we have now let's talk about conversion. So conversion metrics assesses the efficiency of your sales and your marketing funnel. They track how well you convert the website visitors to free users and then to active participants or paying customers in your blockchain ecosystem. Now, conversion in Web3 often looks quite different from traditional funnel metrics. Key areas to track include wallet connect to transaction complete rate. This shows how many users who start an interaction actually complete it. High drop off rates might indicate that there can be, say, high UX issue or something similar to that. Free tier to a premium tier conversion. So for dApps with tiered models, this is similar to a freemium conversion in Web2. So it is very important that how you convert the users into a paying customer. Then the NFT mint participation rate for NFT projects, what percentage of whitelisted actors actually mint, and then token sale participation rate for projects conducting token sales, what percentage of registered users participate. So in DeFi, you might track the percentage of users who progress from simple swaps to more complex actions like liquidity provision, yield farming, staking. For example, Uniswap might see a high rate of users performing swaps, but a smaller percentage providing liquidity. So understanding these conversion rates helps identify where users are dropping off and where improvement can be made to increase the engagement and revenue. Margin. Now let's talk and understand how margin works. So margins are crucial for assessing the financial health and stability of your operations. So they include gross margins, operating margin, and net profit margin. So in the context of Web3, these margins can be influenced by factors such as transaction fees, gas cost, and operational expenses. So gross margin is basically here the revenue you have generated minus the cost of goods sold. Here the cost of goods sold would be the server cost you are paying, the development expenses you are incurring, the security audits you have to do, all these things. Now the operating margin Operating margin is generally identified as operating income, which is divided by the revenue, gives you a operating margin. And the net profit margin is then found by, divide the net profit is divided by the revenue, and you get the net profit margin. And there you understand what is the minimum amount which is, bringing you to break even or actually helping you to grow. For instance, in the case of say DeFi, lowering operational cost through having some grants, or cloud partner giving some credits could, help improve your margins. And this is, we see every day how all of us achieve these goals moving forward. Now we have to understand the customer acquisition cost. So CAC, as you said, CAC measures the cost to acquire a new user or participant in your blockchain ecosystem. It's calculated by dividing the total cost of sales and marketing by the number of new users acquired in a given period. So as you can see, the slide clearly would mention here. So you actually identify how this works. So it is very very important that you have, you're spending the cash in the right amount to acquire number of users you are targeting. So overspending would, eventually bring you to a high burn rate, which we don't want. So, for example, say if you spend $100,000 in marketing in a month and acquired 2,000 new users, your CAC would be 50, as per the formula you can see on the slide. So, this is a simple explanation. So, here in Web3, reducing CAC often can be achieved through community driven marketing and strategic partnerships. Collaborating with influencers, community leaders, and other blockchain projects can help lower your CAC by leveraging their networks. So now let's talk about burn multiple. So the burn multiple measures how efficiently a startup is spending money relative to its revenue generation. It's calculated by dividing net burn by the net revenue, net new revenue. So whatever amount is being spent, what kind of revenue it is bringing in would give you, the burn multiple. For instance, if your net burn multiple for a quarter is $500,000 and your net new revenue is $200,000, your burn multiple would be 2.5. You will just simply divide it by the new revenue you have incurred, you have achieved. So in Web3, keeping a low burn multiple is crucial, especially in volatile markets, because uh, we see the volatility in our markets is pretty high compared to the traditional markets. So strategic partnerships can help you manage cost here, such as collaborating with the technology providers, achieving some discounts, joining accelerator programs as you have done for funding and resources. So this is a way you actually achieve right burn multiple. Perfect. Also, it is very important when we talk about the bone multiple in terms of, when you want to calculate the bone multiple for Web3 particularly. So we see that the traditional formula could also be extrapolated to the the three formulas here derived here. It is, say, the treasury depletion rate versus the network growth could give you the bone multiple. The token emission rate versus the new user you are acquiring out of it is another way of finding the bone multiple. Then development cost versus the protocol revenue growth would simply give you the bone multiple. It is as similar to what we learned in the previous slide. Now working capital ratio. Working capital ratio is a measure of a company's short-term financial health and operational efficiency. It is calculated by dividing current assets by current liabilities. As you can see, the formula is given in the slide. A ratio above 1 indicates that a company can cover its short term obligations, while a ratio below 1 would suggest potential liquidity issues. So, these are some of the quick on hand calculations that we need to take care of, so we understand how a VC would look at you, or how the market would react to what you're building. So, for blockchain startups, maintaining a healthy working capital ratio is crucial, so that you are actually able to ensure liquidity for operational expenses, for any growth activities or marketing you need to do for growing further. Sorry, this is my last slide. It is about fundraising, and fundraising metrics is basically it assesses a startup's ability to attract investment and the effectiveness of its fundraising efforts. So these metrics includes, traditionally it is basically pre-money valuation, the value of the company before receiving external funding. And there is a term called post-money valuation, the value of the company after receiving external funding. Runway would tell you the amount of time in a company can operate before it needs additional funding. So these are some of the in hand data points which needs to be considered before we are moving forward. And the VCs, angel investors, funds can significantly impact the fundraising success, but they all would be assessing the metrics which we discussed earlier. So securing investments from a reputable fund can enhance the kind of uh, credibility you will bring to the project. It is all about identifying the right kind of ways to actually get the matrices in line, and the objectives aligned with yourself and with the community. So all these right kind of partnerships, right kind of activities, right kind of distribution of your uh, message, or your product would actually mean that you are going as a tier 1 project, and you will be accepted by all tier 1 counterparts, all tier 1 VCs, launchpads, exchanges, and all. So all these is identifying yourself in a spot where you actually reach to that particular uh, category, so that the all these different service providers are accepting you in their due diligence and in their evaluations. So this brings me to the conclusion. So understanding and tracking these metrics and benchmarks is crucial for growth and success of your project. So strategic partnerships would amplify your efforts, driving efficiency and expanding your reach in the competitive landscape. By focusing on these metrics and leveraging the power of partnerships, you can set your project on a path to success in the rapidly evolving world here. And now, if there are any questions, please feel free to ask. And can connect me on LinkedIn, on Twitter. And that is all from my side. I hope that had you were able to understand a few things which I was trying to.
If somebody have a question for the teacher, please feel free to turn on your mic.
À, tớ hiểu là khi nào ra tiền được với cái trò này. Kém nghiêm túc một tí nào này.
I mean, I kind of have some minor question because like you really talk a lot about the metrics, how the VCs are really interested in about the technological level.
Ở đây mình
But
cho biết
like
là
some of us are GameFi projects and we are not really sure if there's going to be a metrics for games or something like the contents,
Yeah.
or it's only for the tech startups only.
Yes. So whenever it comes to there is a very specific set of VCs, very specific set of launchpads which are very, very particularly interested in gaming and NFT projects. So their metrics would mean that can be different from the metrics which we discussed, but more or less these metrics could imply or apply to you or the gaming project as well. It is very important that you have a working, show to showcase how actually Web3 is included in the game. They do identify that what kind of Web3 element are you bringing? So if you are introducing a token, is it only to buy, say, a particular skin in the game or ammunitions, or you want to actually you're creating a use case where the tokens would be out tradable or the assets become tradable. So the Web3 elements will be there, and the Web3 elements will be gauged on these benchmarks which we discussed. Of course, this entirety of this benchmarks would not apply to the gaming project, but some more or less it will be the same, because we have been talking to a lot of VCs, and we have in Pivot some gaming startups. We receive applications from here and there. So we understand that whenever a gaming project comes, it has to go through a certain kind of VCs which are interested and actually understand games. So, but more or less, they also have these kind of metrics to evaluate whether you are ready for receiving funds or not, whether your community is actually interested in getting actually using your game or playing the game in real life. So these are some of the ways in which you will be able to actually identify how much as we discussed, there was burn multiple, there was customer acquisition cost. Whenever you're launching your game, you will go through these sets to identify your growth. So benchmarks and metrics for the VCs to particularly making an investment would be different, but these metrics which we identified for assessing your growth would be the same, I guess.
So you have to see like what kind of metrics our VCs are really actually looking for certain games, and then you have to focus on certain metrics, not really something like the technological side, but like
Yes.
user acquisitions or like okay, yep, thank you very much.
Does anyone have the question for the teacher? It would be nice you take the advantage to ask him in this class. Do you have homework for the student after this
No,
class?
no, may I don't
No?
have.
Okay, that's all right.
But it will be very interesting that you see the first slide we have about the VC ladder of proof, and you try to identify, because I think it applies to all the startups, whether it is in gaming phase or whether it is a gaming startup or a DeFi protocol, to understand where actually you are on the ladder of proof. Are you in the zone of seeking the product market fit, or you have already proved your product market fit? This is actually a very, very effective uh, framework to identify how the VCs would be looking at it. So it would be very interesting if you can take some time at your leisure and identify where actually you belong in terms of the ladder of proof. Yeah,
Yep,
that's all.
thank you. We'll definitely live through that.
Well, if nobody has a question left, of course, after this class, if you have some question pop up and you have something to ask for Zishan, please feel free to bring us or like just connect with him on LinkedIn and X. And yeah, thank you so much, Zishan, for the class today.
Thank you so much, mate.
Yeah, it's
Thank you
very
so much for having me. Thank
yeah.
you so much, everyone, for listening and coming here. Thank you so much.
Yeah, thank you for all of you. And Yeah, and the for the projects, the next class is on Wednesday, so don't forget to join. Once again, thank you, Zishan. Thank you,
Thank you.
guys.
Thank you. Thank you. Bye bye.
Còn tính hai đứa làm việc.